All right, this is Obeid on behalf of V Electronics, and in this video, we'll dig deeper into our T2125, okay, to figure out the cause and effect of typing in different numbers on your T2125 and its effect on your tax refund. Okay, so when it comes to your T2125, okay, you can use your software to file your T2125 along with your personal tax return. Okay, and this is what your T2125 looks like, statement of business or professional activities. Okay, you have part one, starts off with your identification, your personal sensitive information such as your name, social insurance number, so on and so forth. Part two, you have all the websites from which you make income. Okay, further down, part 3A, okay, this one starts off with business income. Okay, now this one is gross sales for 3A. Now, if you want to figure out your gross sales, as I mentioned in the last video on T2125, you can always use QuickBooks, okay, and you can check your profit and loss detail report, okay, to figure out your gross sales for your business, whether it be for this year, for last year, or for the last couple of years. Okay, so let's say our gross sales, okay, commissions or fees, GST, HST collected, which covers GST, HST collected or collectible, is $2,257.01 from the last video. Okay, and notice what the refund amount is. Okay, as of right now. Okay, so the tax refund, this is $6,620.31. Okay, now note, we will not change anything else on this tax return apart from the T2125. Okay, so the T4 will stay the same. Okay, code 14, code 16, all the deductions along with your employment income will stay the same. Okay, your T slips, all the other T slips will stay the same. Okay, all the other information on this tax return will stay the same. Okay, the only part will change is the part on your T2125. Okay, starting with part 3A. Okay, so let's say right now, and you can note this down, your tax refund is $6,620.31. Okay, so if you were to change your gross sales, okay, let's say we change it to, okay, $5,000. Okay, let's see the impact. Okay, this is 6,044.28. Okay, let me do that again. Okay, so let's say this was $2,257.01. All right, the tax refund was $6,620.31. Okay, so now if I was to go ahead and change this amount over here, gross sales, to let's say $5,000, okay, notice the tax refund over here. Okay, this is $6,044.28. Okay, so if you do the math, okay, you basically change the gross income, the gross business income from $2,257 to $5,000. This was a difference of $2,742.99. Okay. However, the tax refund over here, okay, not changing anything else on your tax return. Okay, this was $6,620.31. Take away 6,044.28. Okay, this was a difference of $576 simply by changing your gross income. Okay, which means, okay, the more you earn, okay, the less you get as part of your tax refund. So in this case, you made around $2,000 more. Okay, you ended up with $500 less as part of your tax refund. Okay, so let's go back over here on our T2125. Let's change this figure over here, part 3A. to $10,000. Okay. Now notice the tax refund over here has gone down significantly to $4,709.13. Okay. So if you do the math over here, it was $6,044.28. Okay. So $6,044.28. And now it's $4,709.13. Okay, that's a difference of $1,335.15. Okay, now let's go ahead and reduce this income over here. Okay, so let's say next year you didn't make as much as this year. Okay, so let's say this amount over here right now is $1,000 rather than $2,257.01 that we started off with. Okay, so notice the tax refund. Okay, $6,766.99. Okay, so that's a difference of, okay, $6,766.99. Okay, a total of $146.68. Okay, and you went down from $2,257.01, okay, to $1,000. So that's a difference of 1257.01. Okay, so this is how much you get in terms of your tax refund. Okay, if you earn $1,000 less. Okay, given the amount of credits. Okay, given the fact that the credits stay the same, given the fact that your deductions stay the same. Okay, so in short, okay, considering everything else stays the same, okay, your income will either reduce or increase your tax refund. The more you earn, okay, considering all the deductions and everything else stays the same, okay, the less the tax refund. Okay, the less you earn, okay, the more the tax refund. So next up is 3B. This is your GST, HST, provincial sales tax, returns, allowances, discounts, as well as GST, HST adjustments. Okay, included in amount 3A, so covered as part of your gross sales and commissions. Okay, so basically this is your ITC, your input tax credits. Okay, so what is an ITC, you may ask? So whenever you make a purchase, if this is relevant to your business, okay, if this is a business expense, if this is your inventory, for example, you do have the option to claim the sales tax as part of your ITC, input tax credits. Okay, not only can you claim your sales tax as ITC as part of your HST return that you claim on your business account on CRA, but you can also claim your input tax credit as credits on your T2125 to offset your tax owing or get a tax refund. Okay, so let me give you an example. So suppose your ITC for this year, okay, the year for which you're filing your tax return is $1,527.41. Okay, notice what the tax refund is right now is $6,620.31. Okay, so if you were to change your ITC to, let's say, zero, okay, notice your tax refund, $6,299.55. Okay, so just because you change your ITC from a total of, okay, 1527.41, okay, 1527.41 to zero, okay, your tax refund went down significantly, right? So your tax refund was $6,299.55, And if you do the math, this is 6,620, 31 take away 6,299.55. That's a difference of $320.76, a total of 321 if you round it out. Okay, so $1,500, just over $1,500 in ITC makes a difference of over $300 for your tax refund. Okay, given the fact that everything else stays the same, all your deductions on T slips and all the other information on your tax return. Okay, so let's change it back to what it was. Okay, and this was 1527.41. All right, so we move on to 3D. Now, 3D has to do with GST, HST collected or collectible on sales, commissions, and fees eligible for the quick method. So this is basically the money that you collect when you make a sale, the sales tax that you collect when you make a sale. And you're to report the sales tax as part of your business return as well. Okay? The way it works is the amount of money that you collect gets subtracted from the amount of money that you pay as sales tax to give you a net refund for your HST on your business account. Okay. Now, when it comes to Part 3D on T2125, again, this has to do with the sales tax that you collected. So notice the tax refund is $6,620.31 for the time being. Okay. However, if I was to change this amount over here to zero, okay, notice the tax refund. Okay, it went up. Okay. So you do the math. Okay, let's say your tax refund was $6,620.31. Okay, let's do the other way around. So $6,640.21. Take away $6,620.31. Okay, that's a total of $20 in tax refund. Okay, so you're getting $20 more because you're paying roughly $293 less when it comes to the sales tax that you collected. Okay, so for $293, you have a difference of $20. Okay, let's change it to $3,000. So let's say you have $3,000 of sales tax to pay as part of the business income that you made, as part of the sales that you made. Okay, so notice the tax refund went down to $6,051.93. Okay, so if you do the math, this is $6,620.31. Take away $6,051.93. Okay, that's a total of over $500. Okay, just because you changed your sales tax collected. Okay, so let's change it back to what it was before. Okay, this was $293.41. All right, now next you have 3E, which has to do with HST GST remitted. Okay, in the last video, we used a calculator to figure this one out. Okay, so let's go ahead and change over 3E, the figure for our 3E, and see how it impacts our tax refund. Okay, so let's say right now is $198.62. Okay, your tax refund is $6,620.31. Okay, now if you were to change this figure over here, okay, let's say to $1,000. Okay, notice the tax refund. Okay, this will be $6,640.21. Okay, so $1,000. Okay, and you have a tax refund difference of 6,640. Okay, $20. Okay, let's change it to $10,000. Okay, and see how it impacts our tax refund. Your tax refund stays the same. So it does impact your tax return up to a certain amount. Okay, up to a certain maximum. Okay, so once it goes over that maximum, okay, it will stop changing your tax refund. Okay, the figure for your tax refund or tax owing. Okay, so 3E. Okay, let's change it back to what it was. Okay, let's say it was $198.62. Okay, so 198.62. Okay, and notice your tax refund is back to what it was before. It's $6,620.31. Okay, so apart from 3E, okay, further down you have your gross business or professional income. Okay, so under your gross business or professional income, we did list our online income from eBay and Shopify, the last video, as other income. Okay, so let's go ahead and change this income over here. So right now is $500. Okay, so let's change it to $2,000. Okay, and see the change in your tax refund. Okay, so it was $6,620.31, and now it's $6,305.31. That's a difference of over $300. Okay, just by making a simple change on your T2125. All right, now let's say next year you didn't earn a single dollar. Okay, so rather than $500, use zero over here on your T2125. Okay, notice your tax refund. Okay, again, a difference of 6,718.34. Okay, roughly $100. Okay, just by changing your income on T2125. Okay, we're not talking about business income, we're talking about other income. Okay, so by changing your additional sources of income, by changing the amount of money that you make from other sources, your side income, your side gigs, okay, you can impact your tax refund. Okay, as you can see over here in this case. Okay, you can change your tax refund, the figure for your tax refund. Okay, it went up by $100. Okay, so let's change it back to what it was before. Okay, and this figure over here, this was $500. Okay, so further down, part D, okay, we have opening inventory, line 8,300. Okay, and this amount over here is $300. This is 3Q. Okay, notice the tax refund is $6,621.31, what we started off with. Let's go ahead and change this figure over here under opening inventory. So let's say this figure is zero. Okay, notice the tax refund. Okay, this is a difference of okay, $63. Okay, so if you start off with no inventory, okay, if your opening inventory is zero, you'll end up with $63 less as part of your tax refund. Okay, it was $6,620.31. Okay, right now is $6,557.31. All right, so let's go back and change it to what it was before. Okay, and this figure was $300. Okay. All right. So next up, you have line 8320. Okay. These are purchases during the year. Okay. So any additional inventory that you bought. Okay. Net of returns, allowances, and discounts. So right now, it's sitting at $200 for line 8320. Okay. And notice your tax refund. This is $6,620.31. Now, if you were to change this figure, let's say to $3,000. Okay, notice your tax refund. Okay, $7,013.16. Okay, so that's a total of just over $350. Okay, $392.85. Okay, a few dollars short of $400. Okay, so that's a significant amount. Okay, just because you declared your purchases more than what they were before. Okay, so before your figure was 200, now it's 3,000. Okay, so the more you buy for your business, okay, the more the tax refund. Okay, which means the less you buy for your business, okay, the less the tax refund. All right, so let's change it back to what it was before, $200. Okay, moving further down, direct wage cost or expenses, line 8340. Okay, so direct wage. Okay, right now your tax refund is sitting at $6,620.31. Okay, let's change this figure over here to $0. Okay, so basically these are expenses, direct wage cost. Okay, and if you go back to our presentation that we did as part of our last video on T2125. Okay, so line 8340 include the remuneration you pay to employees who work directly in the manufacture of your goods. Do not include indirect wages such as tips, a salary paid to yourself or a partner, excuse me, okay, withdrawals you may have made from the business. Okay, so notice line 8340 payment made to employees, okay, was $500. Okay, as a result of which your tax refund was $6,620.31. Okay, so let's change it, okay, to $1,000. Okay, notice your tax refund. Okay, which basically means the more you pay to your employees, okay, the more you get in tax refund. Okay, so the more employees you have, okay, the more the tax refund. Okay, let's change it back to what it was before. So let's say this amount or this figure was $500. Let's change it to $500. All right, subcontracts, line 8360. This is $50. Okay, so line 8360, this is $50, 3T. And subcontracts have to do with things like freelancer jobs, okay, or subcontracts given off to subcontractors. Okay, so you're paying somebody, excuse me, you're paying somebody else to do your work. Okay, so in this case, when it comes to your subcontract, okay, this is $50 for the time being. Okay, $50 for subcontract, as a result of which your tax refund is $6,620.31. Now, if you were to change this figure to, let's say, $1,000, Okay, notice your tax refund went up. Okay, so this is a difference of roughly $165.53. Okay, so $166, which basically means the more subcontractors you hire, the better your tax refund. Okay, the more you pay to your subcontractors, okay, to your freelancers, the better your tax refund. Okay, so let's change it back to what it was before, and let's say this amount or this figure was okay, $50. All right. So apart from that, you have your closing inventory. Okay, this is what you're left with at the end of the year, at the end of the fiscal year or tax year, in terms of your inventory for your business. Okay, so right now it's sitting at $500. Notice the tax refund is 6,620. If you were to change this figure over here to $3,000, okay, notice your tax refund goes down. Okay, so this is a difference of over $500, 525 to be exact. Okay, so basically, okay, the more you have in your closing inventory or as part of your closing inventory, the less you get in your tax refund. Okay, so your closing inventory will impact your tax refund. Okay, let's change it back to what it was before. Okay, and let's say this was $500. All right, so that's line 8500. Okay, further down, you have expenses. Okay, this is part four. Okay, so as part of part four, you have expenses such as advertising. Okay, now the beauty about QuickBooks, you can basically populate all your expenses on the profit and loss detail report. Okay, you can populate all your transactions. You can populate all your sales tax figures. Okay, for each and every transaction. Okay, you can populate all your bank service charges. Okay, your business expenses. Okay, your revenue from business, your sales, as well as your employment income. Okay, so this is what you can do with QuickBooks. Okay, and you can do this for every single year. Okay, or multiple years at once. Okay, depending on your needs. So we go back to our software, TurboTax. Okay, and type in a figure for advertising. Okay, now basically the way this works, okay, the more expenses you claim, the more credits you claim, the more those credits offset your tax owing. Okay, which means the more credits you have for the deductions on your T slips, for example, okay, the more of a tax refund you get. Okay, so let's go ahead and type in a figure for advertising. Let's say line 8521. Okay, this is $5,000. Okay, notice the tax refund, it went up to $7,013.16. Okay, so if you do the math over here, this is $7,013.16. Take away what it was before, over $300 of tax refund, $392.85. Okay, now obviously this will depend on your total deductions on your T slips. Okay, it will also depend on the total credits that you have on your T2125. Okay, so my tax refund may not look the same as yours. Okay, because your deductions are different than mine. Okay, maybe you have a higher figure for deductions on your T slips. Okay, maybe you made more in money in employment income. Okay, as a result of which your deductions are more than my deductions on my T4 slip, as a result of which you may end up with a higher tax refund because of the credits that you use to offset your tax owing. Okay, so Going back to advertising, right? It was 0. Let's change it back to 0. Okay, so no money spent on advertising this year. Okay, the tax year for which we're filing this tax return. Okay, meals and entertainment. Okay, so we go back to our presentation from the last video. Okay, your meals and entertainment. Okay, so basically the maximum amount you can claim for food, beverages, and entertainment expenses is 50% of the lower or the lesser of the following amounts: the amount incurred for these expenses and the amount that is reasonable in the circumstances. Okay, so entertainment expenses, they include tickets and entrance fees to an entertainment or sporting event. Okay, so on and so forth. Okay, so we go back to meals and entertainment. Okay, and if you're not quite sure what this is all about, you may refer to the last video that I made on T2125. Okay, so meals and entertainment. Okay, right now it's sitting at 0. Okay, if I was to change this figure, let's say to $3,000. Okay, line 8523 is now $1,500. Okay, notice the tax refund. It went up to $6,868.34. Okay, so that's a difference of just over $200, right? Around $250, $248.03 to be exact. Okay, so let's change it back to what it was before. Okay, further down, you have meals and entertainment for long haul truck drivers. So if you're a truck driver, okay, the money that you pay for your meals and entertainment, okay, you can claim the total expenses for your meals and entertainment on line 8523. Okay, so let's say as a truck driver, okay, as a long haul truck driver, so you drive long distance rather than local deliveries. Okay, so let's say this is $2,000. Okay, which means line 8523 is $1,600. Okay, notice the difference. Okay, tax refund is $6,883.34. Okay, so let's do the math over here. So this is $6,883.34. Just over $250. So around $263.03 to be exact. Okay. Now, obviously, if you drive all year round, this figure is going to be much higher than $2,000 for some truckers. Okay. So let's say this amount over here is $5,000. Okay. Which means line 8523 will come around $4,000. And notice your tax refund, $7,013.16. Okay, now it seems like we've hit the maximum over here in terms of tax refund based on the deductions that we claimed on our T4 slips and elsewhere. Okay, however, as I mentioned before, okay, if you're a truck driver, you may end up with a higher tax refund because your income is going to be higher than the income on the T4 slip for this return. Okay, your deductions are going to be higher than the deductions listed on the T4 slip for this return. Okay, so $7,013 is not the maximum. All right, so let's go back and move on to bad debts. Okay, this is line 8590. Okay, if we go back to our presentation, okay, bad debts, you can generally deduct an amount for a bad debt if you meet the following conditions. Okay, number one, you had already included the account receivable in income. Number two, you had determined that an account receivable is a bad debt in the year. Okay, so line 8590, this is bad debts. Okay, now we change this figure to $3,000. Let's say right now it's sitting at zero. Okay, so this is $3,000. Okay, notice your tax refund. This is up to a maximum of $7,013.16. Okay, you change it to $200. Tax refund, 6,978.50. Okay, you change it to $100,000. Say, for example, just to see what the figure is for our tax refund. Okay, and that confirms what I said earlier. We've hit the maximum for our tax refund, which is $7,013.16, based on the deductions that we claimed on our T slips, mainly T4 and T4As. Okay. All right, so let's change it back to what it was before. This will be zero. Okay, and further down you have line 8690. This is insurance. Okay, now this is not your auto insurance, unfortunately. Okay, we do have a separate code. We do have a separate box for auto insurance. Okay, this is insurance relevant to your property. Okay, so we go back here and we look at insurance. So this is you can deduct commercial insurance premiums that you pay for insurance on any buildings, machinery, and equipment you use in your business. So this has to do with your business property, whether it be your building, okay, your warehouse, your distribution center, okay, whatever you use for your business, your machinery, okay, whichever machinery you use, okay, as well as the equipment that you use. Okay, let's say you're a contractor, use tools and equipment. Okay, so whatever you pay for insurance for any one of those will be declared over here under expenses on your T2125. Okay, and basically, okay, the more you claim, the higher the tax refund. Okay, which means the more expenses you have, okay, for your insurance, the higher the tax refund.